Welcome to the deep dive. Okay, today we're talking about a real software cautionary tale, Evernote.
Yeah, it's fascinating, isn't it, how it went from being like the absolute gold standard.
Totally. The
Yeah.
place holding, what, 250 million digital
Yeah.
lives? And then almost overnight turning those loyal users into, well, data refugees.
That's a good way to put it, refugees.
So our mission here is to really unpack the end game. The financial and operational decisions after 2022 that caused this meltdown.
Right, and when you dig into the corporate filings, the user reviews, you see this pattern emerge. It's pretty alarming.
Let's set the scene first, though. Evernote launched way back in 2008, right?
Yeah, 2008, and it just exploded because it promised stuff that was, well, revolutionary then. Cloud storage, reliable syncing.
And that searchable text inside images thing, that was huge.
Oh, absolutely killer feature, that reliability, that innovation. It got them a nearly billion-dollar valuation by 2013. They were untouchable.
But things started to fray, didn't they? Even before the big sale. We looked into it, and, 2018 looks like total chaos internally.
Yeah, that year was pivotal. You had this massive leadership exodus, just boom.
It wasn't just one person either. It was the CTO, the tech brain, the CFO, the money person, the CPO, so product vision, and the head of HR, all out within 30 days.
Think about that. The core leadership just gone. And you can really see the damage in the numbers. The user base was already shrinking before the acquisition.
How bad was it?
Downloads dropped, get this, 82%. From about 9.6 million in 2017 down to just 1.7 million by 2023, a staggering drop.
Wow, so they were definitely vulnerable, ripe for a takeover, like you said.
Exactly. Which brings us to November 2022. Milan-based Bending Spoons steps in, acquires Evernote.
And makes that classic promise, right? Don't worry, nothing will change. We're just here to make it better.
You guessed it. Standard corporate speak. And then, well, the changes came fast and hard. 6 months later, nearly all 250 U.S. employees were let go.
Oof, that's brutal.
And then came the pricing shockwave, the sort of nuclear option for users.
The price hike, how bad was it?
Annual subscriptions jumped 88%. 88. From $69 a year to $130.
Whoa, $130. Was there like a massive feature overhaul to justify that, or just...
Nope. And crucially, no grandfathering for existing loyal users. You paid the new price, period. It felt like pure extraction.
And what about the free users? They always had a pretty generous free tier, right?
Bad. Past tense. They absolutely gutted it. It went from, I think, 100,000 notes down to just 50.
50.
50 notes. That's barely usable.
Right, and they gave people only 28 days notice. If you already had more notes, you could still read them, but you couldn't create any new ones unless you paid up.
Yeah.
It basically bricked the free version for existing users.
Okay, so here's the paradox, though. Bending Spoons says Evernote is profitable now. And to be fair, we did see reports that they improved some things.
Yeah, that's true. Users reported better syncing. The interface got cleaned up a bit. They added some, AI features. The app itself arguably got technically better. But profitable based on what? That user base must still be shrinking after those moves.
Exactly. Here's the catch. Despite nearly doubling the price, their revenue only went up 13%. And downloads crashed another 43% in 2023 alone.
Right. So that's not growth. That's milking the dedicated few who feel trapped.
It looks exactly like extracting maximum value from a shrinking base. You could call it liquidation almost.
Yeah.
The loyal users are the asset being liquidated, not nurtured.
And how does that $130, or what is it now, $14.99 a month, how does that stack up?
It stacks up really badly, actually. $14.99 monthly for pretty basic features. Compare that to Notion, which starts at $8. Obsidian is basically free if you manage your own sync. Even Apple Notes.
Which is free.
Right?
Wait.
Apple Notes now does like 80% of what Evernote does, maybe more for some people, for zero cost, charging nearly double the competition for fewer features. It's a tough sell. It feels hostile.
So the pattern seems pretty clear. Leverage that legacy loyalty, stabilize a declining app just enough, then jack up the prices massively.
That seems to be the playbook, yeah.
So for you listeners, if you're still using Evernote, the big takeaway is export your data regularly. Make sure you have a backup plan.
Definitely.
And if you're just starting out looking for a Notes app, honestly, pretty much anything else on the market is going to give you better value right now.
It does make you wonder, though. Bending Spoons made 3 more acquisitions in 2024, even while Evernote's downloads were tanking.
Good point.
So the final question for you to think about is, does this company see acquired apps as software to actually improve and grow long term? Or are they just buying customer lists to, well, monetize into dust?